Over the last 10-15 years, internet has completely transformed how we live, shop, travel, and even how we invest. Today we use platforms like Paytm, Zomato, Swiggy, Policybazaar, Nykaa, sometimes every single day. These companies have built massive user base, disrupted traditional industries, and become household names. But here is the reality. Just because a company is popular does not mean it will create wealth for investors. Take Paytm for example, a widely used app, but the stock has seen massive wealth destruction since listing. On the other hand, a company like FoF has created tremendous wealth for long-term investors. Then Eternal, that is Zomato, is another example that has created good wealth for the investor in last few years. And that's the problem for retail investors. We all believe in India's internet growth story. Confusion is which stock to pick, at what valuation, and what if it crashes. That's where an index-based approach can help. Thanks to Nifty India Internet Index that tracks the top listed internet companies of India. So in this video, we'll break down India's internet revolution and future potential. What exactly is this Nifty India Internet Index and how you can invest in this Nifty India Internet Index with a recently launched NFO, Groww Nifty India Internet ETF and Fund of Fund. Alright, let's get started. Just 15 years ago, it was impossible to imagine that in 2025, India would be world's second largest internet consumer with over 750 million users. Thanks to low-cost mobile data and high smartphone penetration. Look at some of the trends like online payment with UPI and digital wallets. Impossible to imagine 10 years ago, but today there are more than 18 billion monthly transactions with transaction value of 25 lakh crore and 450 million active users. Then look at the e-commerce revolution. Who imagined that we would be able to order products at our doorsteps? Then came online food delivery that is serving millions of people every single day. In fact, today the market is rapidly shifting towards quick commerce with delivery within 10 minutes. These quick commerce apps are now part of our daily lives. Another great example of digital revolution is the rise of fintech world. Traditionally, getting a loan meant visiting a bank, submitting paperwork, waiting days for approval. But today, with just a few taps on your phone, you can get instant loans, all powered by fintech apps. Not only that, earlier investing in stocks or mutual fund was paperwork heavy. Today, fintech companies have made it a few click process. In fact, digital brokers have completely disrupted the traditional broking models. There are many more use cases of internet that have become part of our daily lives, including travel booking, OTT platforms, online insurance purchase, online gaming, online learning, and so on. With digital native Gen Z entering the workforce, the next 10-15 years could be golden phase for digital economy of India. Now let us look at Nifty India Internet Index. To help investors participate in the internet theme, NSE has launched Nifty India Internet Index. If you look at its detail, it was launched on 28 February 25 with a base date as 1st October 21. At the moment, there are 21 stocks in this index and weight of each stock in the index is based on free float market cap. This index gets rebalanced semi-annually. As far as sectoral representation is concerned, consumer services has 63.1% weightage, financial services has 35.3% weightage and remaining 1.5% with media, entertainment, etc. This slide shows the top constituent of the index where Eternal has 20.2% weightage. Please note that there's a maximum cap of 20% for a single stock. Then next is PB Fintech with 16.5% weightage, InfoEdge with 15.6% weightage, then Paytm has 8.5%, FSN Ecom that is Nykaa has 7.8%, IRCTC with 6.4%, followed with Angel One, Swiggy, Motilal Oswal and IndiaMart Intermesh. Now this slide represents the entire 21 stocks in the list across e-retail, e-com category that has 35.6% weightage, Fintech has 26% weightage, Internet and Catalog Retail has 19.2% weightage, followed with Stockbroking and Elite Services, Tour and Travel, and then Digital Entertainment. By the way, this Nifty India Internet Index is not investable. You need a fund that invests in this thematic index. And that's where Groww has launched India's first ETF tracking this very index called the Groww Nifty India Internet ETF. It's a passively managed fund that would try to replicate Nifty India Internet Index. We'll discuss it shortly in the next section. For now, the important question you should ask is, internet companies have been very volatile. While some companies might look very promising, they may underperform. So how does this index manage this volatility? Well, the good part is this Nifty India Internet Index rebalances every 6 months. This slide shows how index has rebalanced itself every 6 months with number of companies in and out. In last rebalancing on 14 Feb 25, 2 companies got in and 1 company was out. Next question is, how is the performance of this index? So this slide represents the performance of Nifty India Internet Index in last 1 year, which is 25.9% return as of 31st May. This has significantly outperformed Nifty 50, Nifty 100 and Nifty 500 index. In 3 years also, the performance is very good. If you look at the Sharpe ratio that represents how much return you are getting per unit of risk taken in 1 year, it is best for Nifty India Internet Index, but in 3 years, it is at second position after Nifty 500. Clearly, Nifty India Internet Index has outperformed the market over the last 1 to 3 years. Although we don't have long-term data as majority of internet companies got listed recently. I think that overall, internet is a great theme to consider having some exposure to. But we have seen picking individual internet stock is hard. Paytm looked promising but saw deep value erosion. Nykaa surged post-IPO then crashed. Even Zomato had wild swings. Another challenge is valuation. Majority of these companies are in early growth stages. Revenues are growing but profits aren't stable yet. So it's tough to know what is their fair valuation. With an index like Nifty India Internet, you are not betting on one winner. You are buying a basket of companies driving India's internet story. It also provides an excellent diversification across entire internet ecosystem. Now let us understand how you can invest in Nifty India Internet Index. Till now, there wasn't an easy way to invest in this internet index. But recently, Groww Mutual Fund has launched India's first ETF tracking this very index called the Groww Nifty India Internet ETF. This ETF is passively managed and tracks the performance of Nifty India Internet Index and traded on NSE just like a stock. So now with a single investment, you can gain exposure to some of the top listed internet companies of India. Think of it as a basket of India's digital future, curated and simplified. As far as expense ratio is concerned, since it's a passive fund, it should be on the lower side. We are yet to get the details on this. Now the big question is, who should consider investing in this ETF? So this ETF offers a targeted, theme-based approach and is ideal for those who believe in India's long-term internet story but don't want to stock pick. That said, it comes with volatility. Many companies in this index are still in the growth phase, not yet profitable. So returns may not be linear. If you are a conservative investor, this should not be your core holding. But if you have a long-term view and want thematic exposure, this can be a good satellite addition to your portfolio. As always, invest only after understanding the risk. To sum it up, the internet has not only changed how we live, but also how business operate and scale in India. We are witnessing a generational shift, and the companies driving this change are now available to investors through a structured, diversified and transparent route. Nifty India Internet Index and newly launched Groww Nifty India Internet ETF provide retail investors a simple way to participate in India's digital growth story without the pressure of picking individual winners or timing the market. As with any thematic investment, don't invest blindly. Understand the risk, size your allocation wisely, and treat this as a long-term bet on India's digital future. And if this theme excites you, keep tracking how these businesses evolve, because the next decade could belong to those who understand the power of platform, data, and digital distribution. So this is it for this video. To explore more about this ETF or invest directly, you can explore the Groww app. I've added the link in the description below. If you have any question, let me know in the comments. Also, if you find this video useful, do share it within your circle.